in. Speaking of money, it's the Monetary Policy Committee's decision day today. We've got Latha joining in with the editor's take. Latha, I was just looking at a lot of notes and very interesting. Views are so split, right? I read Soumya's note and he said that everything is front-loaded this year. So why should monetary policy easing be back-loaded? What's your sense?
Well, actually, everybody thinks that this is going all the way down to the wire. There were even people in the market who thought that there may be two policies. If they announce a very stiff penalty, then there'll be one kind of policy. And if everything is still hanging in the balance, up for negotiation, another policy. But at the moment, that's not how the market is poised. Whether you look at our poll or whether you looked at Ritu's poll, the implication seems to be a dovish pause. What it means is don't cut now, but give indication that there is space available. And how would they do that? By changing the inflation forecast, which anyway has to be revised. They're standing at 3.7, Street is standing at 2.9. So you have to cut it down by half a percentage point at least. So they can give that dovish indication by cutting the inflation forecast. The market will also watch, besides what they say about inflation and growth, they'll watch what they say about liquidity, because one of the big things is if the governor says transmission of the rate cut is not yet complete, which means I have to keep liquidity surplus. So that sentence will be watched for. The call rate, which is the rate at which banks borrow from one another for 1 day, that's the rate which should be at the repo rate. That's the rate the RBI tries to control. At the moment, it is below the repo rate because you're putting excess liquidity. When will he bring it to align with the repo rate? Which means you will remove liquidity. Those are the kinds of sentences the market will watch out for. But my sense is that what he says on growth could become very important. The first quarter, GDP number will come on August 31st. That is going to be good because of a base effect and because of all the front loading. I mean, we saw good rural consumption as well. The second quarter also will be good. Because, again, base effect, last year it was just 5.4 or something. So it's going to be good. The real slowdown is going to happen in the second half. So the governor can position growth in such a way that if I see signs of deceleration, then space opens up for a cut. And therefore give the feeling that, something can come in on September 30th, which is the next policy. And the bond market may even like it. Because if you give away everything, then there is no reason for the yields to fall. Whereas if you say, I have something in my bag, maybe, just maybe, yields will soften.
And we'll also have the Fed's decision by then.
Exactly.
By our next policy. Whether they decide to move or not.
Which is exactly why he may want to wait.
Yeah.
So, but he won't say that. It'll be all domestic factors that they will watch out for. The market is poised for a dovish pause. Okay. So let's see what comes.
Okay, thank you very much for that.